Hey, hello investors and future investors. Welcome to the channel. In today's video, I will focus on crypto stocks and I will give you two of these stocks that can be used if you're trading with a small account. So if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies that can give you consistent revenue and everything related to finance and investments. And yes, you too can make money from your living room with options trading, and I'll show you how. And all I ask in return for this free content is an early thumbs up by you hitting the like button. And while you're down there, consider subscribing for more ways to win with options. Welcome to Investment Gains. Let's jump right into it. So before we get into this video, I want to first of all say thank you for 700 subscribers. We're well on our way. Now the winner, which is our 700th subscriber, is none other than Jerry. Jerry, I want to thank you for being part of our small community. Now guys, I need you guys to help support Jerry by using his referral link that's going to be posted in the description below. If you need to open a Robinhood account, please use Jerry's description below. Remember, you both can receive free stocks. Now, for today's video, like I said, we're going to be dealing with two crypto mining stocks that I think have the potential to be the next Mara or the next Riot. Do not quote me on that. Now, as you guys well know, crypto and crypto mining stocks are very volatile. So the strategy that I would be using on these two stocks would be the covered call strategy. Now, first of all, let's go ahead and see what premiums they're currently paying. So for that, we're going to go into Trade Hut options in order for us to open up the Hut options chain. Now we're going to go ahead to sell and call, and we're going to choose our strike date 1 week out, which is going to give us November 26th. Now we're going to go down and look at the options that's trading above the current share price. Now we're going to go with the 13.5 strike price, and as you can see, that gives us a chance of profitability of around 76% or higher. Now with this 76% chance of higher, we will be receiving, because we're selling a call, we will be receiving 0.55 or $55. Every single option contract is multiplied by 100 shares. That's how we get the $55. Now, like I said earlier, crypto is very volatile. So if you need to go higher for a higher chance of profitability, feel free to do so. It still pays a pretty decent premium. So let's stick with the 13.5. Let's go ahead. We're going to click into it. We're going to hit continue, and we're going to choose the amount of contracts we want, which is 1. So right away, once you do this covered call strategy, you will be receiving $55 minimum credit into your buying power. That $55 is yours to keep no matter how this trade goes. Very key important note: in order for you to perform a covered call strategy, you must first own 100 shares or more of the underlying stock. Now Hut is currently trading at a price of 12.15. So if you were to buy 100 shares of this stock, it would cost you around $1,200, which is not very steep if you're trading with a small account. Now, how would you win with this strategy? Well, if on November 26th, Hut is trading at 13.5 or below, then you get to keep your $55 and you get to do this trade again for the following week or the following fortnight or the following month. It all depends on the frequency in which you want to trade. Now, the other way this trade could go, once again, if on November 26th, Hut is trading at 13.5 or above, then now once again you keep your $55. Like I said, that's yours to keep no matter how this trade go, but now you're forced to sell 100 shares at a price of 13.5. Now it's not all a total loss. Let me tell you why. There's two ways to win when you're doing covered call strategy. The first way is going to be, one, the minimum credit you receive right off the bat. The second way to win is going to be by the stock appreciation. So just for an example, let's say you were to purchase Hut mining right now today at 12.15, which is going to be $1,200. By November 26th, the price surpasses your 13.5. Not only would you make $55, you would also make about roughly $135 extra. So your total gain only on this stock is going to be your $135 plus your $55, which is going to be around $200. Now $200 in 1 week, that's pretty decent. Also remember I said if the strike price does not go above 13.5, then you get to do the strategy again for the following week. Now Hut, like I said, is a crypto mining stock and it's very volatile. So my advice is, if you want to trade the stock, I would first buy it outright. I wouldn't do any other strategy on it. And the second thing I would do, I would try to choose my strike price as high as possible, because any point in time, this stock could absolutely shoot up. Now, the downside is that at any point in time, this stock could also shoot downwards. So our second crypto stock for today that we will be using the covered call strategy is going to be BTBT or Bit Digital. Okay, so here we are on Bit Digital, and now we're going to go to trade BTBT options in order for us to open up the option chain once again. Now let's go ahead and see what premiums they're paying. So we're going to go to sell and call, and we're going to choose our strike date just 1 week out, November 26th once again. Now we're going to go right above the share price and see the premiums that they're paying. Now right off the bat, I would go with the 10.5 strike price because I have a chance of profit of 78% or higher. Now with that 78% chance of profitability, you get paid 25 cents or $25. Once again, you multiply the 25 cents by 100 shares. Now that $25 is going to represent, or it's going to give you a return on your investment about 2.6, almost 3%, which is pretty decent. Now once again, this is another crypto stock, so if you want to choose your chance of profitability a bit higher, you could always go to the 11 or higher. It all depends on your risk tolerance. So let's go ahead and click into the 10.5 strike. You're going to hit continue, and we're going to choose our contract, which is 1. So once again, right away with this crypto mining stock, you're going to receive $25 minimum credit into your buying power. Now, once again, no matter how this trade goes, this $25 is yours to keep no matter how this trade goes. This is the covered call strategy. So in order for you to perform the covered call strategy, you must own 100 shares or more of the underlying stock. So once again, if you were to purchase BTBT right now, it would cost you less than $1,000, $970 to be exact. And if you were to choose a strike price of 10.5 and the share price goes above that, then once again, you're going to be making money in 2 ways. The first one is going to be the minimum credit you receive. The second one is going to be the stock appreciation, which is going to be the strike price, which you did your sell call, which is 10.5, minus the share price, which you bought it at, which is going to be 970. So these are my 2 crypto mining stocks that I'm looking at for small account options. Now, we have lots of strategies like this on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, hit the notification bell below to get an alert whenever I post a video. But most importantly, please share this video with someone you think that can benefit from its content. Let's help as many as we can. Thanks for watching, and remember, always keep pushing your investments.